Good morning. The key indices have marched ahead triumphantly over the last 8 days as the FIS seems to have changed their mind, especially in the later half of the March. The foreign inflows have triggered a steroid action and we will have to wait for a while to see how long the effect lasts. Given the current form, the Indian market could well notch up for a few more winning sessions. F&O data points to a healthy state of affairs as well. The start today is likely to be positive again, but one cannot rule out some softening. Don't get fooled by the index performance alone. The relative underperformance of the non-index shares remains a hedge. Globally, we have a mixed picture. The US economy is hale and hearty, even as the few economies in the world are under stress. The Wall Street has been on a tear and has shown commendable resilience in the face of multiple global issues. But high oil prices are cause for concern as a result of persistent turmoil in Middle East and North Africa. The debt issues of peripheral Eurozone are hitting the headlines again, and Japan may take a while to recover from the March triple warming. Going ahead, one will have to look out for the possible changes in the monetary policy in Europe, UK and later in the year in US as well. China too may continue to jack up rates gradually. The RBI is also likely to remain vigilant as inflation is still elevated. For the day, keep an eye on monthly auto sales, trade data and the manufacturing PMI. On the global front, investors will keenly follow the US job reports aside from the manufacturing PMIs. Eurozone sovereign debt problems continue to cloud the sentiment with PIG CDS testing new highs. Irish Central Bank said that its four big lenders will have to raise 24 billion euros to stay afloat after stress test. World agricultural supply demand estimates report shows tight supplies. Crude oil spiked 2.4% to $106.72 dollar after Gaddafi's army took back some lost ground from rebels. FIs were net buyers of Rs 33.24 billion in the cash segment on Thursday according to the provisional NSE data. The domestic institutional investors were net sellers at Rs 17.16 billion on the same day. In the F&O segment, the foreign funds were net buyers at Rs 22.9 billion. The FIs were net buyers at Rs 10.43 billion in the cash segment on Wednesday as per the SEBI data. Mutual funds were net sellers at Rs 2.49 billion on the same day. Moving on to the recommendations, the technical calls for the day are: we advise buying ICICI Bank in the range of Rs 1090 to Rs 1095 with a stop loss placed at Rs 1070 and for the target price of Rs 1150. We recommend traders to short UCO Bank April futures below Rs 106 with a stop loss of Rs 109 and for the target price of Rs 99. Our derivative strategy for the day are: log Videocon Industries April future in the range of Rs 192 to Rs 193 for the target price of Rs 198 and with a stop loss placed at Rs 190. Short BRFL April future in the range of Rs 262 to Rs 263 for the target price of Rs 253 and a stop loss placed at Rs 267. Thank you. Wish you have a great day ahead.